So welcome everybody to Tuesday, October 21st, Lunch and Learn Series. Today's taxes. Most of you guys have been to these before and kind of know what's going on. Tax season's coming up, obviously. And so this is our last one before tax season. So this is a super simple deal. This isn't really a training kind of thing or anything like that. We figured it was a good idea to just go over the tax form so that you guys got an idea of what's going on with taxes. The reason we're doing this is every time we do taxes for somebody, part of our procedure is at the end of that procedure of doing somebody's taxes, every one of our volunteers, every single time we do a tax return, sits down with the client and does what I call upper left to lower right. Goes through the tax return line by line. Starting with the upper left, which is, hey, is your name spelled right? Is this your name? Is this your address? And then we work our way down. Is your kid's name spelled right? That kind of stuff to check and make sure from our side whether that basic information is right, because if we have basic information wrong, if that's not your social security number and that's not your name and you don't live there, we got a big problem if that's on your tax return. But after we do that sort of checking part, making sure everything's spelled right, all the names are right, and all the ages and the birth dates are right, we get to the actual tax return. And what's going to happen today is what we do during our tax preparation, which is as soon as we prepared somebody's taxes, just like you guys, when you send your taxes to go have somebody else prepare them, and you go to have them go over it with you, you go basically one question: do I owe any money? Right? And if the answer is no, you don't owe any money, then you pretty much have lost interest in any sort of but details of the tax return. Because you just exhale and go, we're good, right? Well, one of the things we like to do is make sure that the people we deal with understand their taxes, because what our goal is to have them, as technology meets certain things, people should be doing their own taxes. You're just a simple person with simple jobs, simple things. You should be able to do your own taxes. And part of our goal is that at the end of this tax procedure that we have done for you for free, is that we explain to you what we just did and how it works on your tax form, so that you'll understand it, but also so you can go, I could do that. I could totally do that. That's not that hard. Now that somebody, for the first time in my life, has gone through the tax form with me, it's not that intimidating. It's not that crazy. It's not that weird. It's not that, oh my God, mysterious. It's just not. It's just like your back of your checkbook. You put the stuff in there. It's really not that complicated. So today, we're just going to go through the tax return, and hopefully at the end of this training, you're going to go, thank you, because nobody's ever just gone through the tax return, and it makes it so much easier. Oh, this is why I keep this instead of that. This is why I never have to worry about keeping track of gas. I have to keep track of mileage, or these things like that. All those sort of things that you hear at parties, like, well, if you do this, this will help. No, it's not that complicated. We're going to simplify it today. And that's what Abby's job is today, is just to go through the tax return with you, answer your questions, but basically walk you through the tax return, give you an idea what's going on, and hopefully have you have this revelation at the end of it and go, man, it's not that hard. I should be able to do my own taxes. Maybe this upcoming year with a little help from us. That's fine too. But our whole goal is, as technology meets sort of other things, people need to understand and should be able to do their own taxes. So that's kind of where we're coming from with this presentation. So just ask a lot of questions or don't ask a lot of questions. But like I said, the point is to get you guys to understand a little bit more and have a different view of the tax form, so that it's not just this mysterious black boxy thing. You're going to hopefully at the end just be like, whoa, that's pretty straight ahead. Abby, knock yourself out.
Hey, thank you. Yes, definitely ask questions. Usually when we do the Lunch and Learn series, we kind of just have the one expert, that's me, right, talking about credit or whatever. But today you have myself, Jeffrey, and Imelda, and all of us. I have over a decade of tax experience by myself. Jeffrey probably has, what, 40 years, 50 years, something like that.
We didn't talk like that.
Like, between us, we have like literally a lifetime of tax knowledge and experience. So ask us questions, and if you don't want to, if you have like a personal question, just come downstairs, right? Y'all know where to find us, and we're happy to answer your tax questions. That was what we do for 4.5 months. So We're gonna go through this in a super zoomed in version, but you have all probably seen one of these a year, hopefully, if you file every year. This is the 1040. It is what gets sent to the IRS when you file your taxes. So you might get 30 pieces of paper for your tax documents. The IRS gets 2 pieces of paper from you. So the 1040 is 2 pages. This is what Jeffrey was referencing when we do like the top left to bottom right. It's the 1040. This is the 2024 1040. There's going to be a different version for 2025, but the IRS doesn't usually publish those until December or January. So it'll be a little bit different, especially with the big, beautiful bill stuff, which we are going to talk about to conclude our presentation today. So just be aware, there's going to be like a few changes, but overall, this is how the 1040 looks. So this is your tax return. Okay, so let's zoom it in a little bit, and we're going to just kind of walk through this like you all were our taxpayers. Like Jeffrey said, everyone who files their taxes at Tax Help, we walk them through their entire tax return so they know exactly what they're looking at. So the top section up here, your first name and last name, this is the taxpayer, our primary taxpayer. If the taxpayer is married, we'll see their spouse's name and social security number listed on the right-hand side. Of course, we have your address. If you live in a foreign country, that's listed here. Nobody donates to the presidential election campaign. Don't do that. Donate on your own if you want. And then we have filing status. So this is a big one. It tells us a lot of stuff about the taxpayer.
Just real quick, let me just get it out of the way. Presidential election campaign. That's on every tax form. Think about a presidential election year. This doesn't matter anymore because what you're doing if you donate $3 to the Presidential Election Campaign Fund, the Presidential Election Campaign Fund was originated to offset the huge amount of spending on elections. And so the thing was, if you were running for president, you could say, hey, I am not going to take private money. I'm going to take the presidential election campaign money. So I'm not taking dollars that are beholden to corporate individuals, let's say. I'm taking it from the taxpayers who are giving us this money. It's a sort of a matching type fund. Well, the amount of money that Amazon donates to the presidential campaign alone probably means that this is a useless thing. Yeah. So all of that money gets donated and then it doesn't get used and then it ends up being turned back into the general fund, right? Because every presidential candidate chooses not to use that because they want to use the corporate money that they get $700 million for, or they could choose chump change for the ethics.
So it's either or, they can do
either or. And so
they do that for the mayor too.
Yeah, and so it's the same sort of thing, but that's what that is it was originally put out there to say, hey, there's too much control, so we're going to let the people control it, and you can donate to the presidential campaign, and the presidential candidate uses that money, and then they're beholden to you, the citizen, instead of the corporate donors, and so that, yay. But that didn't work. They still take all the corporate money, and so they choose $700 bazillion from the corporations instead of $5 million from the presidential election campaign. So that money, if you use that, if you put $3 in there, they won't choose to use it, and then it will eventually get turned into the general.
Thank you. Middle section here, we have our filing status. So single, that's for like single people, right? People that's one person on the tax return. That's how I file. I'm an unmarried person and I have 0 dependents. So that is what a single filer is, only one person on the tax return. Head of household, we see this a lot with like single parent type situations. That is where there is one taxpayer, meaning one person listed here and some people listed down here in dependents. So that's like a great single parent type of deal. Married filing jointly. Of course, if you're legally married, you can file jointly with your spouse. Some people like to file separate from their spouse for various reasons. We don't do that at Tax Help though. We will only file married filing joint for our taxpayers.
The reason we don't file filing separately is because married filing separately is a punitive filing status, meaning the IRS punishes you for filing married, filing separate, because the IRS says, these idiots, they're just trying to file. They said, when I was single, I got a $500 refund. And when you were single, you got a $500 refund. And now that we're married and we file married, filing jointly, we owe $1,000. That's not right. So we should file separately. The IRS is on to that. So if you're married and you file separately, you're going to lose your child tax credit. You're going to lose your earned income credit. You're going to lose all those credits if you file separately. But there has to be a category for married filing separate, because we were married and we had filed married filing jointly in the past. But now what we tend to see is absentee partners that just, when was the last time you even saw your partner? I don't know. It's been like 6 months. Are you still married? Yes. Well, you're not filing married filing jointly because you haven't even seen that partner in 6 months. And so there's a statute in the tax provision to where if that's the case, then we would ask a series of questions. And basically, if the man, let's say in this case, if I had left and she was doing the taxes, we would end up filing her as a head of household to get her the credits instead of the separate thing, because it's a much better thing. But married filing separate, we don't do it because it's punitive filing steps.
Down here, we have digital assets. So if folks deal with crypto, they can check yes. We don't do that at Tax Help. Down here, we have the standard deduction. So when you file your taxes, you have two options. You can itemize or you can claim the standard deduction. The nice thing about most, probably all tax softwares these days is you go in and enter your deductions, which might be things like charitable contributions, the interest you paid on your student loans, the interest you paid on your mortgage, things like that. If I enter all of that stuff in for myself, the program will weigh, is it more beneficial for Abby to just take the standard deduction or to itemize? And it will automatically default. I would say like probably everyone that files with us takes standard deduction, and likely most of you too. So that's there. It's good to just enter every form you get, even if you know, like, hey, I'm not going to itemize, just enter it. Then we have our dependents down here. So there's a spot to list 4 dependents, but then like, you know, you can always list more on a separate sheet if you have like a bunch of kids or a bunch of people you're taking care of. Sometimes people get confused. Your dependent doesn't need to be your biological child. If I had like my niece living with me, who's a child, and I'm taking care of her, she would be my dependent. Even though she's not else's dependent. Yeah, she couldn't be her mom and dad's dependent because she lives with me. But in like for dependents, only one person's allowed to claim them. If I claim my niece and my sister claims my niece, her daughter, whoever files first, it's going to go through, and whoever files second, the IRS will reject it and be like, hey, the social security number of your dependents already listed on someone else's. So then she and I would.
And do we have people every tax season who are lining up first to beat the partner?
Yes.
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 We have lots of those people. Gotta beat them. I gotta beat them. Yeah.
Okay, so now we're getting into the meat. Oh, yes. Go ahead.
What are the guidelines around adult dependents? Like if you have other
But
adults living with you that you're.
if there's like a test, right? You were kind of alluding to it. It's like, did this adult person live with you for the whole year? Did this adult person pay half their rent or not? Or did you pay all their rent? Did they, like, for example, did they pay for their phone or did you pay for their phone? Right? That's a big testing item. If a dependent usually isn't paying for their phone. Right? And so there's kind of a weird, but there's a whole test that we run through. So, but adult dependents aren't like kids. So if I got a kid as a dependent, that's kind of money, right? That's where the money comes from. That's where you're gonna get the child tax credit, the dependents, all that kind of stuff. But an adult, when I teach it in class, I used to call it my crazy Uncle Ernie, whoever it is, right? He's just sleeping on my couch. He's an adult. He doesn't have a job. He's just sleeping on my couch. He's eating out of my fridge. He's not paying rent. He's been here the whole year, right? Because he's been in my house the whole year, sleeping on my couch, eating my food. Now, yeah, he has his own phone or whatever, but I've supported him 100% for the whole year, right? He has not supported himself. He did not contribute more than 51% of his own existence. Did I contribute more than 51%? Yes. So by definition, he is my dependent, but he's an adult. He's this crazy old dude who's laying on my couch. That's defined as an other dependent. And basically you get $500 credit for that. That the person just offsets your tax liability by $500. So where it comes in, and Abby will show it to you, and I'll remind you of it. See, this first section is the income section. So, and Abby will get into it. All of the income that is on your tax return, even though there's subgroups and all that kind of stuff, will appear right here. And then all of your taxes will appear in another section, and then all of your payments in another section. The other dependent shows up in the taxes section, and you get a $500 credit against any taxes that you owe. That's awesome, except for a lot of people that we deal with, they don't owe any taxes. So that dependency doesn't really help them. That adult dependent doesn't help them as much because it's $500 to offset their taxes. Whereas this dependent that we just went over, that's money, that's credits and all that other stuff. So adult dependent, yes, not that much.
I have a question, but on the little bit section, which is before income. Let's say two friends, both of them are single mothers, they're renting a house. One has 3 kids, another has 3 kids, but they have the same address. If they file separate, only one could put when she's head of household or another one also.
There's, I don't want to call it a loophole, but there's a practical way to approach that. It can absolutely be 2 independent family units in one address. There absolutely can, and there is. And there can absolutely be 2 head of households in one address. It has to do with how that person is paying for those dependents and things like that. But you don't, there's a practical sort of escape route to that. You wouldn't get caught. If you meet the qualifications for head of household, you're not going to get, oh no, I can't take it because I live in the same place as Mary and her kids. You would both be able to take it.
The main thing with taxes is your social security number is like what puts you in the system, not your address.
Okay.
So like, yeah, it's the social is like the most important thing on there, right? That's what locks you in. Good question. Okay, so this is our income section. We're gonna start down here on line 9. Line 9 is your total income. Line 9 is all of these 1A all the way to 8. So that's line 9. Total income will be there. So if we go back to the top, line 1A, that's all of your income from your W-2s. Whether you receive 1 W-2 or 100 W-2s, they will all add up and be reported on line 1A. So all of us in this room will have a value there in 1A for our taxes. Tip income, this is going to look different on 2025 because of the big beautiful bill. There's some changes with tip income, which we'll talk about before we conclude today. Let's see, other stuff that we see a lot in the tax clinic and most of us in here might see, we might see some qualified dividends on our taxes. Maybe if you took an IRA distribution, that will be here. So the total distribution amount will be on line 4A, and then the portion of that is taxable is on line 4B, okay? If you receive Social Security benefits, that's down here on 6A. So again, 6A is how much did you receive? 6B is how much of that is actually taxable. If you did any stock trading, you would have a capital gain or a capital loss reported on line 7. But all of that adds to line 9. So line 9 is a really, really important line on your tax return. Line 12 is also important. Line 12 tells us, are you taking the standard deduction or are you itemizing? And remember, most softwares, probably every software out there, will just default to whatever is the most advantageous for you, the taxpayer.
You can see the standard deduction totals on the left over there. In the olden days, this used to be the exemptions thing. You remember you got the exemption for me, an exemption for you, an exemption for the kid, and then you added up 3 exemptions, and then that's all that stuff. But they did away with that with the standard deduction thing, right? So think about it this way, standard deduction versus itemized deduction. The itemized deduction, think of like the Mr. Monopoly guy, right? His little monocle, and he walks into the bank or to his accountant, and he's got his big stereotypical rich man box of receipts. And he walks into his accountant and says, here's my receipts. Make it work for me, like the stereotypical thing for a rich guy. Well, then you go, well, what is he gonna do with those receipts? Even, I'm not really sure, but I know what you're talking about. Well, what he's gonna do with those receipts is he's gonna look at them, he would go, yes, we can take that. No, we can't take this, right? Everybody would see the stereotype. What he's saying is, this one will work for our itemized list. This one won't. You can't take that one. That doesn't work. So what he's doing is he's adding up all the items that he wants to put on the list for the deduction from his income, because we're going to subtract this deduction straight from your income before we assess the taxes. So we want the largest number to subtract from our income that we can get. So we're going to take all of those items and add them up. Like she was saying, your mortgage interest, your this, your that, your other, all the qualified items on your itemized list. We add them all up. We go, oh yeah, I put my mortgage interest in there. I did that. Okay, cool. We add it up. Most of us, unless you have, unfortunately, serious medical condition and bad insurance for the most part, are not going to have enough expenses to where our itemized list, all those receipts that we have, is going to be bigger than our standard deduction. So again, if we're married and we're filing this tax return, between us, we have, if we're married filing jointly, we have $29,200 of standard deduction. So unless I can come up with $29,200 and one of exemptions of receipts, I'm taking the standard deduction because I want the largest number to be subtracted from my income so I pay the least amount of taxes. So when we're doing all this stuff, we're just going to enter all your items in taxes. And that's what any accountant would do. Enter all the items and then go, well, is it bigger than 29,200? No. Well, then we're not using it. And so people, we say this to people a lot. People will go, we bring everything to taxes. Just bring it. People, well, should I bring this to taxes? The accountant will say, just bring it, just bring it, just bring it, just bring it. We'll tell you, bring it. And then you bring it and you hand it to us and we look at it and we go, we don't need it.
Yeah.
You go, what the hell? I dug for like 4 hours in the back closet and you said, bring everything. And I'm like, it's still gonna be, and I brought you this thing and you went in 1 second, you went, I don't need it.
Yeah.
Well, that's what's happening is I'm looking and I'm being, well, if this is all you got, you're not even close to the 29.2 system. So I don't need that. But I don't know that until I see that piece of paper. So I'm still gonna make you go dig through the closet and bring me that piece of paper. And then I'm still gonna probably go, in our cases, most of our cases, like, nope, I used it, right? If you have a lot of, like, if you have not the greatest insurance and you have some medical issues and medical bills, this is where that would show up. Do you have more than $29,000 worth of receipts? Well, unfortunately I do because I'm paying my medical bills, right? That's where we unfortunately see people. And then people with money, because to be honest, all of those receipts that you're adding up, you have to spend that money, right? You have to have that money to spend it to get it back. And if you're just a normal person, it's hard to have, or a normal couple, it's hard to have $29,200 worth of recoupable expenses over the course of the year. You got to really work.
And that's the word recoupable. You
Yeah.
do a lot of stuff because like I could probably deduct enough medical stuff, but specific things are like, oh, if that's employer type of thing, you can't deduct that piece even though you paid for it out of your pocket. Yeah.
So, but that's a weird thing. And so this is that area where we'll be like, bring it all. We want to see it. Oh, we don't need it. But that's what this is all about in that area. But we still need you to bring it so that we can figure out which is more. But it's a very straight cut and dry. Like you're either over it and we choose whatever's the biggest one we choose. And then I was going to talk about what happens down here with that.
Yeah, in 2025, the upcoming tax season, the standard deduction for a single person is 15,000. And for a married couple, it's going to be 30,000. Okay, so we're going through the taxes. Here, my taxpayer rate. I'm like, hey, line 9, that's your total income. Line 12, it says 14,600 because you're a single person. Okay, you're taking the standard deduction, and everyone's like, what does that even mean? Well, those two numbers are important because that gives us line 15. Line 15 is your taxable income. So you're not required to pay taxes on every single dollar you earn. That's not how taxes work. Your taxable income is line 9, your total income, minus line 12, the standard deduction or your itemized deduction equals line 15. So for example, let's say that I earn $40,000 flat. $40,000 is going to be on line 9, okay? Line 12, I took the standard deduction. We're gonna say it's 15,000 because the math's a little bit easier for me to do in my head that way. So that leaves me what, 25,000 of taxable income? 40,000 minus 15,000 equals 25,000. So even though I earned $40,000, I'm only responsible for paying taxes on $25,000. So the standard deduction, I've heard Jeffrey say this in the tax clinic, it's an invisible bag of receipts. Okay, so that's your taxable income. Any questions about income? Yes.
Under capital gain and loss, is that where you could take either gain or loss on the sale of a property? Or is it
That's
just,
where it would show up. But it depends on what property, because if it's like private residence and it's, you're selling your house, for the most part, unless you have a nominal amount of gain on that house, that's not even a tax issue.
well, what if you took a loss?
Then again, that would be where it would be. It would be on that section. Because what you have to understand is like all of the other, like, what if I'm an Uber driver? Okay, well, that's gonna show up on line 8, additional income. But we just don't, when we do taxes, we don't just write the additional income in line 8. We fill out a whole series of forms that do Schedule C for the business and all the stuff and whatever. And once that's done, that final number gets transferred back over to here. So if I was doing property, I would fill out all the applicable forms. If it's a rental property, a commercial property, a residential property, if it's my private residence, or if it's a rental, whatever it is, I would fill out the necessary paperwork. And then if I had a gain or a loss, that would flow over to line 7.
Okay,
But it depends on what you have to do all the work over here and then flow a
Right.
number
Yeah.
for this return. This is the landing spot for all of the numbers. That's why you made your tax return maybe 75 pages. But this is the sort of final document. But to your question, that's where it would go, but you would have to do the originating documents to
Sure.
get the number there. That's where it would flow to.
Okay, we will move on from.
Oh, and last question I was gonna say,
Sure.
because we see it a lot. What if I got a gig on the side? What if I'm an Uber driver? Where does that go? What if I have my own business? That kind of stuff. Where does that go on my personal tax return? Well, in this case, it's gonna go under line, what is it, 8,
Line 8.
additional income. And that would be where your Schedule C information would come from if you were an Uber driver, or flow from, and all that kind of stuff. Or if you had a pottery business or something, that's where that other income.
This might be like common knowledge, but if we have to do all this, why are they taking it directly out of our paychecks too, like taxes?
Well, technically, we are a pay-as-you-go society. So as you earn money, you're required to pay taxes. Because the government, it's a horrible time to make this point. For the government to stay open, they can't just get paid at the end of the year. They have to have money coming in all year, right? So you have to pay taxes as you earn the money.
This is, yeah,
Okay.
exactly.
And so over the course of the year, you're earning money, but you're also paying taxes, but you're also going to daycare, and you broke your arm, and
Right.
you bought a new this, and all these things. So at some point, the IRS is like, wait a minute, we got to know all of that stuff. We got to know that you did that, that you did that. We got to reconcile all of that stuff. That's what this form is. It's put all that stuff together so that we have the positives, the negatives, the whatever it is. This is your opportunity to say, no, I don't really owe that much money because I spent this on this. Realistically, though, the IRS does your taxes every year for you. Every year. You doing your taxes is your opportunity to tell the IRS what it does not know. I sent a kid off to college. I broke a leg. I bought a house. All that stuff they don't know. But like W-2s, 1099s, all those formy stuff, they've got all that. And they've done all your taxes. So when your taxes, if we do your taxes and they show up at the IRS, when we press send, the first thing that happens is they compare them to the taxes that they've already done for you. That kind of thing. So, anyway, but I wanted to point out that every form of income, no matter what it is, no matter where it comes from, is going to be lines 1 through
1 through 8.
1 through 8 on this form. Now, granted, like we brought, in various other ways, you're going to be, there's other parts of the return that flow into this. 100% of everybody's income that they get in America is going to be represented on lines 1 through 9.
Gifts considered income.
Or what?
Gifts considered income.
Depends on how much and from who. For the most part, no, right now, no.
Lottery?
So here's the lottery is considered
Lottery
gambling,
is income.
but lottery is an income, is a taxable income. But you know, it's not a taxable income. A GoFundMe page,
Interesting.
because that's technically a bunch of small gifts. You don't have to do anything. So if you want tax-free money, get your GoFundMe out. GoFundMe action. All right, you guys can go.
Okay, so the next section we have line 16 through 33. This is our taxes, credits, and payments. In my opinion, not as sexy as the income stuff, but still very important. So, line 16 will tell us your tax, right? How much did you pay? Am I getting that right?
Yeah,
How much
and
did I pay?
yeah, well, the thing is, you ended the previous page.
Oh, no, that's down here.
You
Sorry.
ended the previous page. The last number on the previous page was taxable income.
Uh-huh.
Then you take that taxable income and you go to the tax book and you look it up and you go, well, how much does every American who has this income pay in tax? Right? Because it's the same for everybody who has, what did she say, $25,000? Everybody who has a $25,000 taxable income will have the same
Safe.
tax. Right? So that flows that once they give you your taxable income on the previous page, the next number that they give you is whatever tax it is for that number. So that tax is the number that they literally just pull out of the tax book. What percentage am I? Whatever. The lowest tax bracket in America is 10%. Lowest tax bracket. So the lowest amount of taxes you're going to owe is 10%. Right? I don't remember what the highest tax bracket is, like 30%, maybe something like that. Most of us don't have to deal with that unless you have some sort of, there's issues that you might have to deal with that. But for the most part, your tax is just going to come straight out of the tax book. It's just, they just look it up. You just look over across the thing. And so that line 16 just represents the tax representative of your taxable income.
Then we talk about some kind of credits in here. So with taxes and credits, there's two kinds of credits. We have refundable credits, which are where you get that money back in your tax refund. Okay, we love refundable credits. There's also non-refundable credits, which means you don't get that money back in the form of a refund, but if you owe money, it will offset how much you owe.
Credit for other dependents.
So let's say, what did I owe? 25,000. My taxable income was 25,000, right? Let's say that I had a baby last year, and they're going to give me $1,000 of non-refundable money, right? So now, let's say in that scenario, I didn't pay a lot of taxes, so I started out owing the IRS $3,000, but now I've just told them, hey, I had a baby, right? I had a baby. It's on they're my dependent. They're listed on this tax return. The IRS is like, oh, dang, okay, let us knock off $1,000 from that non-refundable tax credit for you. Now, Abby, you owe $2,000 instead of $3,000. Let's say that I was breaking even, not getting a refund, not owing anything, exactly zero. That kid doesn't help me at all. Okay? So non-refundable and refundable. Do your research. So after we take out all of my non-refundable tax credits, my total tax is on line 24. So that's how much I actually owe, right? And that's just going to be like total overall for that $25,000 of taxable income, subtract all of my non-refundable tax credit. That's how much I actually owe in taxes. Lines 25, A through D, that's going to say, okay, Abby owes, let's say $5,000 on line 24. I owe $5,000 total. But for my federal taxes withheld from my W-2, I've paid in $3,000. So now I owe $2,000. Is everyone following? Okay, so this is saying, this is how much you owe in tax. This part is saying, well, this is how much you've already paid through payroll deductions or estimated tax payments or other things, right? So then my total payments for the year is on 33. This is my total tax liability. How much does this person owe overall? How much should they have given us throughout the year? Line 33 is how much did you actually pay? So if I'm responsible for paying the US government $5,000, that's my total tax, and throughout the year, I paid $6,000 to them through payroll deductions, I'm going to get a $1,000 refund back because I overpaid. Okay, let's flip it. If I owe the IRS $6,000 and I've paid $5,000, I owe them $1,000. So when you get to the end, when Jeffrey said, do I owe anything? Right, that's what people want to know. Do I owe anything? How much am I getting back? We're looking at lines 24 and 33. If 33 is larger than 24, you, my friend, are going to get a tax refund. If 24 is larger than 33, you might owe some money. Yes.
But if the person owed taxes to government, let's say $1,000, so the person paid on certain date, like April 15th, paid $1,000. So IRS could penalize for the $1,000 because it's entire year of not paying this $1,000.
Not if you pay by April 15th.
Right, but I think what she's getting at is, there is a deal. It's back to the pay-as-you-go society. If somebody decide, when you go in to get your job and they hand you the W-4, you can say, don't take any money out. There you go, sign it, hand it to your HR person, right? And you'll get a paycheck with no money taken out for taxes. Now, that doesn't mean you're not responsible for taxes. That just means that you personally decided to not have taxes taken out of your paycheck, right? I can't figure out what's going with that.
If it's certain amount, right?
Oh, right. And so what happens is you could choose to not have any money taken out of your paycheck, and the IRS wouldn't catch you for that first year because they don't really know what's going on until you report and reconcile at the end of the year for your taxes, right? So you do your taxes at the end of the year and you owe like all that tax money because you haven't paid it, right? We just saw it. So it's like, so you owe all that. You're like, oh, dang, dude, I owe $5,000, more than $1,000. The IRS will say, look, this year you pay us $5,000, that's fine. If you do this again next year, well, it's realistic if you do it again next year and the year after. If you do it again next year, you have to understand that we are a pay-as-you-go society. And so if you choose not to pay as you go, we're going to choose for you. And you are going to now be required to make at least quarterly tax payments to us because you're not paying it at the end. You can't pay at the end. So eventually the hammer would come down and you would have to either pay like quarterly, or you'd have to get yourself set up to where you didn't have balances of over $1,000. I think you can't just keep owing large sums of money every year. The IRS will come and say, no, that's not how it works. If you do that, we're going to start putting you on payment plan. Business expense, think like sales tax or business taxes, right? If you're a small business in New Mexico, like corporate gross receipts tax, you might only pay your taxes twice a year, right? But if you're Walmart, you're paying your taxes because of the size every single day, right? So it's a kind of a relative thing, but it's back to the pay-as-you-go thing. You can't roll balance of that $1,000 at the end of every tax year because that means you're not paying your taxes at the time. They'll catch you eventually, and then the hammer will come down and they'll just tell you have to pay a quarter.
It's a little bit more deduction, so
Yeah, well, there you go.
they owe you, not you owe them.
That's the trick. And as you can see on the taxes and credits, what we're subtracting from the taxes is those non-refundable credits. We're subtracting it from the taxes, but if you don't have any taxes, you don't get any money back, right? But as you can see, once we see the payments down there, the earned income credit, the additional child tax credit, the American Opportunity Credit, those are all refundable credits, or they could be considered forms of payment if you had more taxes owed, right? So you can see that it's how much did I owe and how much have I paid? And just as Abby said, is 24 more than 33 or 33 more than 20?
And this is our last section of the 1040. So line 34. If line 33 is more than line 24, this is the amount you overpaid.
I want to emphasize it's overpaid. When you get a refund, you are simply getting your money back.
Yes.
You are not getting their money. You're getting your money back that you overpaid.
So your tax refund, if you get a refund, it's a combination of two things. One, did you get any tax credits? If you're like me, a single person, unmarried, no dependents, there's like no tax credits out there for us, right? We're working people, we're not super low income. You're probably not getting any tax credits. If you're in my situation and getting a tax refund, that means that you overpaid the government. And here's how I like to phrase it. You gave Uncle Sam an interest-free loan. So I know that we're all patriotic for different reasons, which is awesome. I don't think any of us are cool with giving the US government an interest-free loan.
Mm-hmm.
Think of how much money you could have if that was like in your account, in your retirement account, in your high yield savings account. So when you get a big tax refund, it's totally natural to be excited, right? Everyone wants to get a nice big check. Go back into the credit section and see, am I getting this because I had that baby and I went back to school and I am a low income working person? Or did I pay the US government too much and give them an interest-free loan and now they're giving it back to me? So think about your tax refund in that way. If you can keep your own money, it's better. You have more control over it, and then you can, earn some money via interest. So your tax refund, I know it's exciting to get a big check or direct deposit. It's how much you overpaid. You overpaid the US government, okay?
In tax school, they teach you that the perfect tax return is 0.
Yes.
That means that you have the most amount of your money for the most amount of time over the year, and the IRS had the least amount of your money over time over the course of the year. But it's almost impossible. All you got to do is like work one overtime day or have a sick day, and then you can't plan being 0. It's almost impossible.
2 years ago, I got a $2 tax refund and I was like, yes, $2. And like, I was so happy because I did my tax planning so good. Okay, so lines 35, this is going to be your direct deposit info, right? So your routing and account number, we need to know if it's a checking or a savings account.
Beginning this year, the IRS is no longer accepting or issuing checks. Say it again. Beginning this year, the IRS is not accepting or issuing checks. So at the end of this tax return, we used to say to people, would you like to have a check for your refund or would you like to have it directly deposited? Well, we're going to have issues this next year because if you don't have a bank account, we can't send you a check. Now, we're working with Bank on Berkeley, and we have all these issues to where if you come see us, what we're trying to do is you come see us, you don't have a bank account, how are you gonna get your money? We're gonna try to have on-site bank accounts that you can set up through our Bank on Berkeley thing. If you have owe taxes at the end of the year, you can't send them a check anymore. You can't stroke out a check, put it in an envelope and send it. That is not happening anymore. They actually want you to use Venmo now to pay the United States government.
And it just went down yesterday because ASW was out. Yeah.
Right, but the big one for our demographic is, and a lot of people just feel comfortable getting a check. If they're I want my check, I want my check, I want my check. It's not a choice anymore. You cannot get a check and you cannot pay with the check. There is none of that anymore, period, over, done. So you're gonna have to have a direct deposit if you're gonna get it.
So like you talked about Chime before,
Yeah,
that
Chime
doesn't work the same way or?
will work the same way.
Okay.
And the difference with Chime is that if Chime just goes belly up and all your money goes away, it's totally not federally insured.
Okay.
You could have like a prepaid card situation, right? Like those Visa cards you can get at Walmart. A lot of times have like an account number and a
But it's
routing
for
number.
convenience, I think is that.
That's all we need. We just need an account and a routing number. So if you do all your banking on a prepaid Visa card, we can roll with that as long as you have an account and a routing number. But you will need to have your refund direct deposited and the amount you owe direct debited, or like you send it to them. If you owe any taxes, it's going to be on line 37. And then most people e-file their taxes, but if you want to mail in, I don't even know if you can mail in after the direct deposit thing, but you and your spouse, if you're married, both need to sign.
The biggest mistake, but I guess this is gonna be less, the biggest mistake for tax returns getting returned is people forget to sign.
Yeah.
That's the number one thing. I think it has to do more with amended returns and stuff, because that's more people use that paper.
Yeah.
They just forget to sign it. But that's the biggest thing. We literally, if we have an IRS mandate where a client has to send in a paper return to the IRS, or legal issues where they have to generate a paper return, there's lots of reasons why we have to do a paper return. We will go through and make them do all of their signing. Like, we highlight it, put the little sticker there, and do it in the office before they leave, because like everybody forgets to sign for tax return. Like, everybody forgets to sign. So we do it in-house.
Okay, so now we've come top left to bottom right. We've done the 2 pages. So now we're going to talk about the big, beautiful bill. There's a lot of changes. We picked out things that probably affect us in this room as working regular people, right? So the big one, if you get tips or overtime, you're going to be able to deduct up to $25,000. And the cool thing about that is you can itemize, you can take the standard deduction and take this tip and overtime deduction. So that's like one cool thing for people who work a tip or overtime job.
And that information to be put on the tax return of tip and overtime deduction is the responsibility of the employer and will be on your W-2. It's not your responsibility or the responsibility of whoever the tippy person is. It's the responsibility of the employer, not the employee, to get that
So
information.
it will be additional.
They've said 2 things, the IRS, that we're not changing the way the W-2 looks, but we're adding new information to the W-2.
Well, there is a tips and wages section on the.
Right, there's some stuff in there that's like,
already.
but the form is gonna look exactly the same, but now they have to deal with, but that's gonna be dealt. The point is, if it gets wrong, it's gonna be wrong by the employer, not the employees.
Right.
So you don't have to do anything as the employee. They have to get it right. Whether they get it right or not, to the industry.
We also have an additional $6,000 deduction available for seniors. The senior is anyone who's over age 65, or $12,000 for married filing joint, MFJs, married filing joint. So that's a really great thing for our senior folks. The child tax credit has been expanded. So the new child tax credit, you can get $2,200 per child, and up to $1,700 of that is refundable, which means you can get that money back, right? Charitable deduction, I'm personally really excited about this one. Now you can deduct up to $1,000 for a cash donation to a charity, even if you don't itemize. So,
Do you guys remember a couple of years ago, they had it on there where you could take $300 and not itemize? I don't know if anybody was aware of that. This is the same thing. They just made it 1,000. They just brought it back.
yeah,
It's ability to take that, this, because it normally would fall on your itemized thing. They're saying, hey, we're gonna let you take it off your itemized and use it in addition to your standard deduction.
Is this like one payment in one day, or is this like?
No, it's gonna be, you could make 10 payments of 100, or whatever, it doesn't matter.
But you need
Up
to have a receipt just in case.
Yeah, but it's up to that.
up to $1,000 for a single.
If you gave
and
$50
$1,000
to a charity, you should still claim your $50,
Right.
but it's up to 1,000.
Then we have, this one is like, I know the 3 of us are like, but we need to include it.
This
The
could be-
car loan interest deduction, so you can deduct up to $10,000 per year of interest on a new loan vehicle, but the car has to be new, it has to be assembled in the US, it has to be for your personal use, it has to be for all these other criteria. Those are the main ones that would affect us, the normal people. But please, 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 research this tax credit, go talk to your accountant before you go buy a new car. Okay, don't come down to our office tomorrow and be like, look at a picture of my new car. I got it because I can get that deduction. We don't want to see it. So go, like do your research. We see this being a huge point of misinformation.
Yeah.
for
There's a lot going on with this, and there's a lot of stuff that's not.
So that one's kind of rough. Another change is there's no more tax credits for getting an electronic vehicle or doing clean energy on your home, that kind of thing. I believe the New Mexico credit is still up, Jeffrey.
Yeah, but I don't think there's any funding for the New Mexico.
Okay, great.
Because that would.
So, yeah, that one, we've had a lot of problems with that one too, with our folks. And then the final one, which we talked about, is all payments from the US Department of Treasury are going to be direct deposited. That includes tax refunds. It also includes Social Security payments. So that is like a big one for our folks. And that's not like new starting this coming year. That's as of September 30th of 2025. So everyone that gets Social Security is like already aware of that, hopefully for our sake. But just so y'all know, everything needs to be direct deposited from now on. Okay, any final questions?
I have one question for the senior advantage tax. So if you're filing, I mean, obviously I'm not 68 yet, but if you're filing married jointly, do you both have to be in that, do you both have to be in that age bracket?
Good question. For this particular change, yes. For at least every other thing I can think of on the tax return, and y'all correct me if I'm wrong, usually just has to be one person needs to be over 65.
Yeah, because this is,
Property tax stuff.
it's still considered two people on, it's, you have to be both. This though, that's
So what
the,
if one, could you get a single, or could you still, it'll be filed jointly and only one person, like me and my husband are 8 years apart, so it's really gonna mess like his ability to get that up later, because if I'm not, I'm 8 years behind him. So
Right.
if we did it and he got to that age, could he get the credit even though we're still,
yes,
okay,
yes.
okay, perfect.
You would have to wait until
Right.
you caught up.
But
and
he
then-
could still. do it.
Exactly.
Oh, he would get the 6,000 is what you're saying?
No,
He would.
He would, yeah.
He would,
Okay,
because he
that's-
qualifies. But they would file married filing joint, and when we mixed up all your income, the part that got the credit, we wouldn't be able to include yours in it. It would only be like, does any part of your income qualify for this thing? Well, yes, my husband's does.
Okay.
Yours doesn't, so
Right,
we would
okay.
put his amount in there and you would just be SOL until you came.
Okay,
out.
perfect. No, that's good at least, because if not, he would.
Yeah, and that's basically remember when they said, when Trump administration said that they were gonna make Social Security not taxable? That's this. They're making, they're
Oh,
giving you an extra $6,000
tough.
to offset it, so that basically if you have taxable Social Security, this gives you a $6,000 of the Social Security not being taxed.
Mm.
So this is that Social Security not being taxed thing, whatever.
Is that in effect for 2025 or is that not till 2026?
I think it's
Because I thought most of these big beautiful bills things don't happen until 2026.
they may not take effect until 2026. On the tax return form, the only things you have to know about are the charitable contribution. I thought tip income was coming in,
Yeah,
and I thought the Social Security was coming in. And those are the three that are gonna be
Like when we do taxes.
mathematically important.
and the
to
child
tax.
tax.
And the child tax,
Yeah.
that's just a nice gift.
Yeah.
But those are the only ones that are gonna be in our map. The rest, some of the other stuff, I mean, there's definitely provisions that come in later on, for sure.
Okay, I could think of as, don't forget when your kids like age out to
Yeah.
adjust your deductions, because
Yeah.
I found that out.
Yeah.
I worked in that sort of department too. I mean, you can control how much money is taken out of your paycheck.
Mhm.
And you can, if you're aware enough, you can manipulate that situation based on your situation. We have people who are laborers who work seasonal. And when they work, they're working. They work like 12 hours a day, 7 days a week, like craziness, right? And when they do that, they go in and change their W-4 to 0. Take all the taxes out. Take it out like I'm a single Abby. Take it out like I got no kids. Take it out. Take the maximum amount of taxes out, right? Because I'm 12 hours a day. I'm making my money. Take that out. Okay, season's over. Go in and change my W-4 to don't take any money out of my tax. Don't take any taxes out of my paycheck. So then now, when I'm getting my smaller paycheck, when I'm working at some of the off gigs or what or the other, they're not taking any taxes out. And I'm getting the max of my paycheck because it's really small now. Because I paid my taxes during the main thing. But if you forget and or then the season comes back around and you have it on the don't take any taxes out and you go back to work in 12 hours a day and they don't take any taxes out, then you're totally hosed when it comes back around to taxes. So the problem is once you start to try to manipulate that, if you miss your mark, then you miss your mark. You got to pay. If they don't forget it. If you forget, they don't forget. So there's a lot of people though that it's very easy to manipulate that if you wanted to. You just have to. You have to hit your marks.
Yeah, and you have to know what you're doing. Last year I did some like personal stuff that was going to allow me to access $2,400 of non-refundable credits. Meaning I wouldn't get that money back, right? So I went to Jeffrey with my recent pay stub and we looked at it and we did the math. How many paychecks do I need to not pay taxes on to owe the government $2,400? So I was getting some fat checks for like 4 months. It was awesome. Well, I loved it. And then I filed my taxes. I was like, yay, I owed a little bit more than that, but I was happy, right? Because then when I plugged in that tax credit, I went from owing $2,600 to owing $200. So like, it's totally legal to mark yourself as tax exempt. You can do that. Just like know why you're doing it, make sure you're doing it the responsible way. And then my very first paycheck of the new year, I switched it back to go back to like, no, take out the single people taxes. I would say if you consistently owe money, you need to get with HR and look at your W-4s. You can update those at any time. If you have a baby, you need to update your W-4. If you adopt, if you get married, if you get divorced, you need to update your W-4. You can't, it's not a set and forget thing. You should really be looking at that at least once a year. If you consistently get a refund, go back and look, are you getting a refund because you overpaid the government or because you're getting access to credits? If you're consistently overpaying, you can go to HR, update your W-4 to have them take out a little bit less tax, right? So that you're not getting that big tax refund at the end of the year, but you are getting a little bit of money for each paycheck.
You have to pay the tax that you owe at the end of every year. How you pay that's up to you. You can pay it, you can have a lot of it taken out of your check. You can do this, you can do, there's ways to get it done. It's convenient for your lifestyle. You can manipulate your taxes. But it's to be honest though, you need to most people need to find their lane, get in it.
Mm-hmm.
When people come in and be like, I don't remember what I checked or what I said or how much money is coming out of my thing, I'm like, man, just go ask them, give it a shot, because it's your money.
Okay, I think we'll wrap up with our post-test. I don't think there's anything in the post-test I missed mentioning.
If you guys, as we move towards tax season, if you guys have questions about your own taxes, feel free to come down and ask us. That we don't necessarily might not have the answer, but we're a good first start. If you guys work at the United Way, for the most part, you're eligible to get your taxes done for free by us downstairs. So if that's something you choose to do or want to do, let us know.
But you do just basic form, you don't do Schedule C, Schedule.
Well, we do Schedule C. The stuff we can't do are like rental properties and some of the more nuanced like thing. But we do your basic 1040, your Schedule C, your capital gains, all that kind of stuff for the most part. It's because we're income based, that means we don't have to worry about certain other things.
You might be sending people your way for some W-4 action.
For my finance team, actually, we have.
See you guys.
We're ending right now.
Thank you guys for staying active.
Yes, thank you. It was
Take a
good
talk.
discussion. We could talk about taxes for 4.5 months. Like,
No.
Like, no.
but only between January and April 15.
Also, if you guys, since tax season is coming up, I'd like to remind everybody that I do tax training every year. If you know of anybody who wants to volunteer for Tax Help New Mexico, there are no requirements to volunteer for Tax Help New Mexico. You don't have to know anything. You don't have to be anything. In fact, the less you know, the better it is for me, because then I teach you my way. Then, so if you know of anybody, the training is going to start in December, self-contained. We provide everything. If anybody's interested, it's also you know anybody who wants job training, do the job training example. So you take our training, you are now employable in all 50 states at a professional level job. So there's a reason, if you know somebody who's unemployed who wants to learn a job skill, that will get them employed at a professional level wage, we will do that for them. And give them real world experience for their resume.
Thanks, God. Yeah, it's worse.
And, oh, God, what are we doing? Who's taking the rice and beans? Did we have this conversation last time?
We still have all those components downstairs.
Well, that's what I was saying.
Also, the salsa, if nobody wants it.
It also was really good.
That's pretty good. We just bought a big bag of tortilla chips. Can I take some of it?
Yeah, please.
Perfect.
It's more of a container issue.
I mean, salsa.
I think it
I'm
also
just gonna put some.
saran wrap
Was smart.
in the.
I mean, I
training
would
center
send it all,
if you
but
needed.
No
Thank you guys.
Thank
problem.
you.
Well, good job.
Thank you. Yes.
What are we doing for food next week? We gotta come up with 4 meals.
We got it.